Hey traders, so I do want to talk. This is my weekend video real quick here. I'll try to keep it as short as I can here real quick. So what I want to point out here, I have the volume pot percent steady, and as of the close, Tech got sold to finish off the month here, guys. So heads up on that. Tech across the board got sold into. So basically, if this candle is red, that means they executed on the bid at the close, not the ask. Okay, so it gives a pretty good indication of a strong sell side bias to close out the month. The last time we had a similar situation like this was the last full trading week of 2024. Or yeah, okay, guys. So be very mindful of that. The last full trading week we had a lot. We started seeing really high volume closing, which continued to go lower at that point. So heads up, they are really starting. Institutions are starting to really take some profits here on Megatech, and so basically it's leaning into the possibility by the rumor, sell the news in Techland. So be very mindful of that. So we had a very high alert here for Apple. Uh, we also had let's see here, Microsoft. Look at the size of that candle, Microsoft. We also had AMD. Okay, had Meta. Okay, not quite as much on Meta, but it was still a very strong. That Meta actually was in the 86th percentile of all time. The highest institutional trades on record. So heads up on that, even though it doesn't seem that way. Okay. Then we had what other ones did I? Nvidia had a sell side, so it's a little bit more mixed there. Okay, so that gives you some idea of the rundown here. I had alerts here. Let me double check, make sure I got them all here. I told you EMD, AMD. Go through my list right here. So I had Meta. Oh, Tesla. I didn't do Tesla. Tesla was another one that's giving us alert here, guys. So be very mindful of that. Tesla. And today's sell side action. And actually, this was one of the strongest. So be very mindful of that. Tesla's given us one of the strongest institutional sells of the session here. So be mindful of that. And we'll go from there. Hey guys, so basically the five largest trades by dollars today: Apple, Nvidia, Broadcom, Microsoft, and Amazon. So I gotta check Broadcom here real quick. These are the biggest trades of the session that hit. So be very mindful of that. Uh, the highest ranking, relative strength, Microsoft had the strongest relative strength. I tried a short on Microsoft earlier. I got had a really nice short right out of the gate this morning, but the chop of the day, it took me out break even, and by the end of the day that was a beautiful short on Microsoft. Unfortunately, the morning chop. I'm leaning more and more to think I don't even want to be trading the mornings. I want to wait for a better setup later in the morning. Later in the morning after 10 o'clock. That's the way it's been playing out for weeks now. So if you're trying to trade the opening print, boy, most days it is so difficult. Okay. Um, as far as number of shares, these are the ones that represent the biggest trades of the day. But as far as dollars, and that's to me that's the most important. Those are the biggest trades of the session. Now let's check out Broadcom real quick, if you don't mind. And, AVGO. Okay, and as you can see, even Broadcom, very high, strong sell side action into the close here. Remember, we got a massive gap below us here on Broadcom if they're wanting to start selling off Megatech here. So be very mindful of this scenario going forward. So we got to definitely, I know if you guys are looking for a trend change, we got to definitely keep things in context. Okay, so basically what we have right here is a higher low right here, followed by higher lows. Okay, we currently have an equal low on the downside. So this is not a This is not signaling a trend change yet on the ES. So be very mindful of that. And we are getting higher highs as well. So yes, it was a brutal day. In this trend count right here, we were still getting higher highs right here, but technically we still have a lower high versus the the bigger count there. So it's a real iffy situation there. Okay, we're kind of still stuck in limbo, but we're not. Honestly, we still have not uh, invalidated. So basically, you see where my alert is right here. So this is the upper distribution right here of all-time highs, and technically we're right in that zone. So it was really difficult to go into the weekend short, knowing that we really hadn't violated the uptrend in any meaningful way. Okay, and we still close inside of the predictive model for the week. So anything inside the market maker move low, market maker move high. If I go over here on the daily market maker, you got to put this study always has to be on the daily time frame for it to be accurate. So bottom line is this was the last week's close. We closed right inside of our probability model. So anytime that's the case, that means there's not real fear in the market or real, an outside event. Even though we had really bad news that hit the market with all the tariff news and stuff like that, the markets seriously are, they weren't. The market makers still were able to control price, and there was not a panic move to the door quite yet. So let's be very mindful of that going forward here in our trading. Okay. And let's see here. And we also managed to hold above the Friday expiration of and we actually didn't even, like today, we didn't even cross below going to negative gamma at all. So typically, if it's a little bit more something you have to be worried about, you're going to come into the session, break into negative gamma, and then they try to defend it during the course of the session. That is giving you a little bit better sign, more bearishness setting into the market. And technically, this, in my opinion, is just sideways noise as far as today's session. So be very mindful of that. Now, that being said, we did close a little bit more bearish on the NQs here. We did close below the foot wall, suggesting we're going into next week a little bit more bearish than bullish. That could be possibly why the institution decided to take those big sells into the close there, knowing that we are already in a negative gamma situation going into the 1st of February. So be very mindful, because we did close in negative gamma. We closed within our predictive model for the week, but in a negative gamma situation. So we have to be mindful of that, going into next week. And it's no big surprise that the institutions will get a little bit worried given how we closed the session today. Okay. So we really didn't go much of anywhere on the Russell here. We do have an engulfing candle, weekly engulfing candle here, closing near the lows of that engulfing candle. It can indicate a trend change. I don't want to read too much into it. We're still hanging around this 23,000 level. Very critical bull bear cross here on the Russell. Technically, if we are in the last phases, if we're 2/3 of the way through the market rally, the last 1/3, you should see an outperform in the Russell in the markets. So just be mindful of that going forward. And closing under 2,300 is not the best scenario here. So that's another thing to be worried about. And but we still close within our predictive models. So weekly predictive models. So we don't want to, put too much in it. Maybe they want to come in here, fill some of these lower end gaps next week. So I don't know. We'll see how it plays out. We've got a few gaps down here that still need to be filled. So see how it plays out this week. But this was our monthly downtrend. Okay, this was our prior, and we are outside of that monthly downtrend. So at least for now. So we'll see how it plays out going forward here. And I just wanted to share my one winning trade. I took it slow. Once I had my winning trade in, I didn't do much. I did some SPX on the close. That really made me some money, but as far as the morning session. I went short. You see how we found resistance up here, found resistance right here. Uh, Once we were above, this was the uh, this was the developing uh, uh, value areas for Monday. And earlier on in the session, this one actually was a little bit lower. I was actually shorting above the developing value area high for Monday. So basically, I came in here. I was shorting up in these highs. This dot was down here somewhere. So I was that was my risk reward setup, and then I caught this move down going into 10 o'clock. So that was my big trade for the session. Somewhere through here is where I got in. I took the big trade to the downside. I had to really. It was a nice little win, and it actually made my morning. I was actually going to stop until I saw some really nice price action for SPX into the close. So I took some SPX, lottos, and had a really nice win into the closing session. So it turned out to be a really good week after today, after those two trades today. So just trying to take it a lot slower. When I do go in, I try to go in bigger size and try to be a lot more strategic on my entry and exit points. That's kind of what I'm looking at here. But bottom line is, I did my analysis on the ESs or NQs and ESs this morning, and the risk reward was clearly to the downside. We were into major resistance. This here was proved. This was some major overhead supply up here that we were going into right out of the gate this morning, and so I knew that we knew where the market maker move low was, where Friday's close was. The risk reward was that they were going to fail the resistance early on this morning. So the only thing that I was even looking at, period, was puts or shorting the market. I mean, it didn't look very pretty early on this morning, but bottom line is I always want to see where the biggest risk reward is to the main indices, and I want to trade in the direction how the main indices are going to trade if I'm going to do individual stock names. Okay, and then I try to jump on board with whichever one's showing the most relative strength, most relative weakness, um, and those are the ones that I really want to how I want to trade it. Okay, and so that just gives you some ideas of what I'm looking at here. Hopefully, this will help you guys out and stuff. We're going into next week. I think it's going to be a rough February for the markets. So I don't know. Maybe they'll prove me wrong here and we break out the all-time new highs. But I think it's we're setting up here for some. They're only going to allow this volatility in a tight range for so long, and as Trump keeps stirring the pot and stuff like that, eventually we're going to start breaking down. And the CS trend line right here, I fully think that we could be down here before the end of the week. So put us back down to 21,000. Yeah, I think that is definitely a, a possibility here. So be very mindful of that. And one other thing I do want to point out here. Let me get my other chart going here real quick. Okay, guys, one thing I'm looking at right here, this trend line right here, this represents the 100-year trend line. Okay, the most important trend line of all trend lines ever in the markets. Okay, it's based off 1927 and the 2000 dot-com bubble. Okay, what we potentially have setting up here is an M pattern above that line. So what we're looking at here, up, down, up, double top, and a potential now M pattern setting up here in the markets. So I don't know if that's going to be the case, but it's something we definitely got to be mindful going forward here that we might be setting up for an M pattern. Another thing here, we know that this area right here is very critical. Okay, guys, so we know this area right here is very critical. And we're going into next week here with completely engulfing that very critical area in one candle. This is not the best scenario going into next to start off February. So I definitely want to, we came in this morning and things looked hunky dory, and look how fast that this potential topping area fell out of favor. So I don't know if that's going to be the case. I just want everybody to be aware of that scenario. And another thing you have to be mindful here, if you draw a little trend line right here, guys. So we're right into that uptrend that way too as well. Okay, so there's multiple ways looking at this and everything. But so bottom line is going forward here, we have got, I'm telling you, we have got to stay, basically we do not want to see an early move down into the, what was that, 5,800, 5880, 5880. We really do not want to see a fast move down to 5880 here in the markets next week. If we come in next week and all of a sudden by the end of the week we're at 5880, I mean, guys, you better be tightening your bootstraps because things are about to get really wild. Thanks a lot.